Good morning and happy Thursday. Welcome to this week's Market of the Moment. I am Don Tchaikovsky with Fidelity National Title. So we have Miss Mindy Jones, the owner of the Amy Jones Group, and Mr. Jesse Herfel, the operating principal of Keller Williams Integrity First. With Guild Mortgage, Miss Amber Kavark, and my co-moderator, Ms. Sharon Shahoon, the Vice President of Sales for Fidelity National Title. Andrew is joining us from Phone Animal. And Andrew, thank you so much for joining us as our special guest this week. And I am so excited to pick your brain about lead generation and helping our partners build some inventory out there. Before we dive into the meat of all that, though, Andrew, can you tell us a little bit about your background?
Yeah, absolutely. So I got into real estate in 2014. I joined a gentleman named Tim Heil. I was fortunate enough to do right around 40 transactions my first year, 50 transactions my second year, and it all came through sheer making phone calls. And that led me into jumping into to take over as the president of Phone Animal. We have over 240 inside sales agents currently, but our inside sales agents are calling on behalf of our agents, finding individuals, highlighting the hand raisers of people who are thinking about making the move. If you're looking at starting to add this as a leg of your business, number one, you got to make the commitment. Circle prospecting isn't a short-term game where you can make an hour of phone calls a day and all of a sudden you're going to see listings come through. You're going to have to be committed to about 2.5 to 3 hours per day consistently. Number two is you're going to have some systems. And then last but not least, I would say make sure you do have a definition of what a nurture is.
What is your definition of a nurture?
So number one, we know their motivation. Next, time frame. Next, of course, confirming they're not already committed to a realtor. Number four, agreed upon follow-up. And then last but not least, confirming contact information.
Let's talk about what we've got going on here, though. Jesse, Mindy, what is it looking like out there?
When we look at the inventory, we actually only have about 4,000 homes available on the market in the greater Phoenix metropolitan area, with an average days of inventory at sitting about 2 weeks. You're trying to take advantage of the benefits of the current real estate market. One of the things you might consider is some other geographic option. We've also talked about what that could mean for you from a prospecting perspective. First is for the sellers that have a product that our current buyer pool is looking for. And second, for the sellers where it may be a little bit easier for them to make a move. So if you're looking at the population sitting above $500,000, those folks have a little bit more wiggle room as far as what's available in inventory if they're making a lateral move. And then they have a significant more wiggle room if they're making an upgrade right now, which many people are doing given what the percentages are on their mortgages. Really understanding where you can take advantage of the market right now and what options you have.
Yeah, so I'll just add to that. That is what I'm coaching to right now. It's definitely skill and will. The sooner you do something, the better. As a buyer, if you're a seller buyer, then it doesn't matter because it's house money. You're going to sell here and you're going to buy here and capture the appreciation on your new home. You got to go direct with an offer. Direct to the door with an offer. 10 to 20% of transactions that are happening off market. And if you're just looking through search portals with non-accurate, up-to-date information, sellers and buyers can be making decisions thinking there's not something available for them based on the information that they have access to.
So Amber, what's going on? How cheap is our money and what are our products looking like out there?
Yeah, I mean, interest rates are still incredibly low. And so we have to remember that even with this rapid price appreciation that we're seeing, homes are still affordable because of how low interest rates are. Interest rates will not stay this low forever. The Fed has been very clear in their communication that once unemployment drops into a normal range, which is anticipated to be 4 to 5%. It's an incredible time to be purchasing with these interest rates and the twos and the affordability that it creates.
Amber, you and I were having a conversation yesterday too, because obviously we always talk about primary residence, it seems like, but on investments, you guys are so competitive on second home, on mortgages and stuff too, which is great.
So thank you guys, everybody, and we look forward to seeing everybody back next week.